Hi there. You can go on to the next slide, Anna. There's a lot in the Inflation Reduction Act that will be release funds for improvements in buildings. The biggest two sectors are tax credits. Then there's some rebates. The rebate programs will go through the tax credits will apply in 2022. So anything done this year will be covered by the tax credits. The rebate programs will start up sometime in 2023 because those need to go through the states. So there needs to be a lot of administrative work that's done there in preparation. Then there's a new construction. There's money for new construction. There's money for retrofits of affordable housing, for states to adopt new building codes, more efficient building codes, uh, commercial construction, construction of commercial buildings, retrofits to federal buildings, and training for contractors, energy efficiency and electrification of contractors. Next slide, please. So the first tax credit is one, both of the tax credits are basically extending credits that would have expired this year. So the residential clean energy tax credit gives you a 30% tax credit for investments that you make in certain clean energy production and storage capabilities, geothermal heat pump, solar photovoltaics, solar water heating, and for the first time, home battery storage. So that's exciting. And this goes for 10 years and then gradually declines. Go ahead. The second tax credit increases an existing tax from 10% to 30%, and it removes the lifetime cap. This is really important because that gives you basically a 10-year window to plan all sorts of energy efficiency for your home, knowing that you're going to be able to take this um, this credit every year, that you make some improvement. So that's really exciting. And this includes $2,000 for heat pumps. It also includes fossil fuel equipment, but that fossil fuel equipment has to be much more efficient than what it's replacing. Go ahead for the next one. The first of the two rebates is the homes program. And this is based, the amount of the rebate is based on projected energy savings. So, you have an idea for your house. It involves, either a single or multiple things that you're going to install. And some professional, and I'm not sure whether it will be a HERS rater or simply a contractor, will take a look at what's being proposed. We'll model your current energy use, we'll measure your current energy use, and then we'll model or project what your energy use will be after the new energy efficiency measure has been done. So that's going to be your savings. And the rebate is broken into a couple different tiers. You see here in the graph a dark green, which is the 20 to 35% savings, and then a light green, which is 35% savings or more. So that's the reduction in your total energy usage that this retrofit that you're going to apply this rebate to. Now, any income level can take advantage of this rebate. And get 50% of their project cost paid for. If you are a low-income household, or if the property you are renovating is occupied by a low-income household, then the project will pay for up to 80% of the project cost, and the caps are increased. There is, as you can also do this with a multifamily building, and again, the amount of the rebate depends on who's occupying those particular units, um, and there's a cap for the total number that a multifamily can apply for. And again, this starts in 2023, and it has to go through the states. So we don't know exactly when in 2023 it will start because there has to be, all sorts of administrative stuff done before they can start handing out the money. Next slide. So the second rebate is specifically targeted to what are termed low and moderate income households. So these, you will have to uh, share income information in order to qualify for this. There are two levels. The low income is 80% AMI. AMI is area median income, and I'll talk a little bit about that, or I'll show a couple examples of that on the next slide. But 80% or less of area median income, you can get up to 100% of the cost paid. So as you see in the graph, this $8,000 for a heat pump, you could put an $8,000 heat pump into a home occupied or owned by somebody who's low income, and the rebate would pay that full 8,000. Now, if your income is between 80% and 150% of area median income, sorry, there's an I missing there, you would get up to 50% of the cost. So that $8,000 rebate would only, the full amount of that 8,000 would only be available to you if the heat pump cost $16,000. There is a gap of 14,000 per unit, so you can do multiples of these things. For instance, you could get insulation and air sealing, plus electric wiring, plus a panel upgrade, plus a heat pump. That would total about $16,000. So in a low income household, you'd be able to get the full 14,000. In a moderate income household, you would get half of that 16,000, so about 8,000 if you did those four things, with these prices. Again, this does start in 2023. It will be administered by all the states, and so we don't know when in 2023 it will start, um, uh, but hopefully sometime it will in 2023. Note that this can't be combined, this particular um, incentive can't be combined with other federal or state incentives. So for instance, if you got a Mass Save heat pump rebate, you couldn't also get this federal rebate. And ditto with the earlier rebate program that I described. You can't combine the two rebate programs. Next slide. Thank you. So a little bit about how the states are determining um, income eligibility. Uh, we don't know exactly yet what eligibility criteria they will use, but one of them might be, it might be the Fannie Mae, which is what HUD uses. And fortunately, Fannie Mae has this nice area median income lookup tool. And you can put in your address and it will tell you what the area median income is and a few other facts about that address. In Providence, the area median income is about $100,000, and thus the 150 cap is about 150,000. In Boston, the area median income is 133, and thus the 150 is about 200,000. So that's just to give you a ballpark, and then again to remind you, states may very well use other income guidelines. And they may include number of persons in the household as one of the factors to determine income eligibility. It hasn't been spelled out yet, but this gives you a ballpark. Next slide, please. Just some of the smaller uh, parts of the IRA for buildings. There's $1 billion for affordable housing. This covers not only efficiency, but also climate resilience and notably benchmarking. So, for instance, for the states and municipalities that are instituting benchmarking requirements, that is public reporting of your energy usage, your building's energy usage. This will you could potentially apply for grants to help with this. And it will also, there'll be some funding for HUD to work with, specifically the HUD buildings. There's money for new construction, both in residential and commercial, $2 billion for residential, and this includes manufactured homes, otherwise known as mobile homes, and a third of $1 billion for commercial buildings. This includes buildings being built by nonprofits, and there's an added bonus. There's a per square foot formula for distribution of this $362 million. And if the building is built with prevailing wage labor, then there's a bonus square foot. There's also some money for contractor training by states, and there's money for the federal building upgrades. And finally, efficient buildings, efficient building codes. As you can see from this map, there's a real hodgepodge of building codes in this country. And so there's going to be federal monies that will help states or other entities upgrade their building codes. 1/3 of that for just anybody moving up in any code, adopting any new code, and then 2/3 of $1 billion for those that are instituting stretch codes or zero energy codes. So a lot of good things going on in here, and I will turn it over to Larry to talk about the electric grid.